Gold and silver are money, and everything else is based on that. And we'll get back to ground level pretty soon, I think, because things are spiraling out of control politically, socially, economically.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for March 4th through March 11th, 2024, while supplies last. First, we feature backdated 1-ounce silver maples at $3.39 over spot. We also have circulated British gold Queen Elizabeth sovereigns at $26.99 over melt. And finally, we're offering our choice 1-ounce Palladium bars at just $119 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Rafi Farber from the Endgame Investor, now on Substack. Rafi, thank you so much for joining us today.
Hey, Elijah, good to be back. Always good to talk with you.
Well, it's great to talk to you, especially as we're seeing precious metals rally quite a bit here, gold hitting new all-time highs. Your perspective on what is happening right now?
Frankly, I'm surprised. I'm surprised because the Fed hasn't done anything yet, and the money supply is still more or less shrinking. I mean, bank credit has been growing lately, and I'm not even sure why exactly that's happening. My guess is that high interest rate debt is increasing because people are maxing out their credit cards. You can see that on credit cards. So since money and debt are opposite sides of the same fiat coin, the more debt that people go into, the more money supply there is because of the fractional reserve bank system, as we all know. So that's why the money supply is growing. It's not the Fed doing it. And really, why should gold be hitting new highs now before they start printing again? So I think that's a pretty good sign that when they do, things could get really intense, like gold moving hundreds of dollars a day. And it's not just going to go straight up. There's going to be days where it gets scary down because there's going to be dollar crunches here and there where, banks need their dollars. So they shut down things or call in loans, and you start to see deflationary forces and then inflationary forces the next day. I mean, it's going to get pretty crazy, and you have to understand conceptually, not every day what's happening, but basically what is going to happen as things start to fly out of control, and you got to be prepared for both directions. So I'm excited. I'm also a little bit antsy and nervous, but I try to acknowledge my emotions without being too affected by them because I know what the end game is, and that's what I'm comfortable with.
Now, as for silver, it seems like obviously we're seeing gold at all-time highs, but silver is lagging behind, obviously, but we are still seeing a pop there. You recently put out in a video you did with Arcadia Economics that you think that right now is kind of like the 70s for silver, where silver didn't do a lot, but then it's about to make its big move. Can you expand on that?
Yeah, I looked back into the 70s, and thanks for reminding me about that. I thought that was a pretty good comparison. In the 1970s, right, 1971, Nixon closes the gold window, and then all the gold and silver bugs who understood what real money was back then, and a lot more people understood what real money was back then than now because we've been so separated from it for so long that we don't even know what it is anymore. Even I don't. I mean, I know intellectually what it is, and I can put the concepts in my head, but it's hard for me to understand that you take a silver coin, you give it to somebody, and that's money, and you pay them, and it has nothing to do with the name on the coin. It has to do with the weight of the thing, right? I've never experienced that before, but I'm going to get back to it. So the 1970s, 1971, he closes the gold window, and then gold and silver don't do much for a year. They even go down. And the gold bugs are like, oh, what's going on? This is crazy. This doesn't make any sense. And then the Keynesians are like, well, we told you that. The reason that people have demand for gold is because of dollars, not the other way around. And then, we're like, what are you talking about? And if Bitcoin existed back then, it would be like, that would still be a popular thing if it was in the 70s because of the closing the gold window. But I digress. We saw that from, I think, from 1972 to 74, gold and silver went up into what was at that point a parabolic top. I don't remember exactly what the number was, but it was the highest ever seen for either metals at that point. And then for like 5 years, silver did pretty much nothing. It went down. It had a bottom 2 years later, I think in 1977, 76, 77, something like that. It took 2 years to bottom, and then it slowly climbed its way back up until 1979 when it hit the 1975 high. And then 1979, 1980, we all know what happened. Everything just went crazy. So I'm seeing the same pattern now that if we mark 1971 as 2020, when there was like a sort of a monetary reset where, because it's not the exact same thing, nothing ever is, but if you count that as the beginning, then we made a high into 2021, a double top, let's call that 1975. And then we went down into 2022, just 2 years later from 2020. Let's call that 1977. And then we should be around 1978, 1979 right now if patterns repeat. And markets do spiral. They have repeating patterns. Doesn't mean everything has to be exactly the same. Doesn't mean that we have 1 year left exactly because it has to be 1980. But the point of these historical comparisons is to remind us that markets don't always do what they're logically supposed to do immediately, but in the end, they always do. So we just have to keep that in mind and understand conceptually what reality is, which is gold and silver are money, and everything else is based on that. And we'll get back to ground level pretty soon, I think, because things are spiraling out of control politically, socially, economically. Egypt is now hyperinflating right to the west of me. The Egyptian pound was just allowed to float, and now there's hyperinflation over there, hyperinflation in Lebanon, hyperinflation in Syria. I don't know what's going on in Jordan, but like war over here, nothing is calm.
When it comes to the banking system, we've talked with you quite a bit about the Bank Term Funding Program, and that is going to be coming to an end here very shortly, I believe within a week or so. What are your latest thoughts on that and the current state of the banking system?
Well, I heard something interesting from Monaco64 from Mario, and he told me that the FDIC, for whatever reason, is like 2 weeks late in issuing its state of the banking system quarterly report. I don't know why. I would just expect, Occam's razor, maybe they're lazy, maybe somebody had a cold. I don't know. But the conspiratorial mindset that I can't really seem to get out of these days is that they're trying to hide something or cook the books or whatever, or something doesn't look very good. I mean, we just saw today that New York Community Bancorp is pretty much dead now. Like it was a surprise to people. I just wrote this on the Endgame Investor on Substack that like I think NYCB, New York Community Bancorp, has like has a few days left and then it's done. And then, well, bam, now today, well, like, whoa, they announced, oh, they need a cash infusion. Why do you think they need a cash infusion? Because when there's bad news about a bank, like people take their cash out. That's what happens every time. So what do you expect? As for the Bank Term Funding Program, yeah, it's coming to an end on March 11th. But the issue isn't necessarily when it comes to an end, but when the loans that were taken out come due. And that's a big chunk of the loans are due by April 9th, 10th, 11th, something like that, because it took time for banks to actually start taking the loans. So I think if I remember the numbers correctly, it's like $70 billion. I could be off. Whatever, it's a lot of money. And that's all going to have to come off the Fed's balance sheet because they now have the assets that back those loans, and they're going to give back those assets to the banks, which are the underwater treasuries that they took on their balance sheet. And then the banks are going to give them the money back. The Fed's going to take the money, blast it out of existence or whatever the appropriate verb is, and then their balance sheet will shrink. And there is a fault line. There is a tectonic plate somewhere on that balance sheet where once they hit that, there's going to be some plumbing problems in the repo markets, which is the underwater dungeons where all the mass scale funding is done, overnight funding. And if there aren't enough liquid securities in that dungeon, which is represented by the Fed's balance sheet, then something gets clogged like it did in September 2019. Is that going to happen again? Yeah. Do I know exactly when? No, but the loans coming back, the BTFP, Bank Term Funding Program loans coming back to the Fed, they're going to take us closer to that number, wherever it is. And wherever it is, and something happens the next day, people are going to come up with research papers and put them through AI, and they're going to say, oh, we should have known that, and then we'll be ready for the next crisis, but we won't.
So it seems like a possible liquidity crisis then if the banks are going to have to essentially give back all this cash that they have and they got from the Fed, in exchange for those underwater treasuries, then the money supply is going to be shrinking, and there possibly could be a liquidity problem in the banks going forward.
Not necessarily the money supply will be shrinking, though it probably will. But what shrinks is really the monetary base. But yeah, I mean, you want to say that if the banks are giving cash back to the Fed, the money supply shrinks, but not really, because at least not directly, because the banks put the treasuries back on their balance sheet and it becomes part of the money supply. So the money supply becomes it's less cash and more treasury based, but it still counts in terms of calculations that people make in terms of loans and all this other stuff. So what really shrinks the money supply are defaults, right? Because once debt is either paid down or defaults, then money supply shrinks. So if there are defaults because of this, then yeah, the money supply would shrink. And who knows what bank is going to fall tomorrow? Today was NYCB. Tomorrow will be something else. There'll be a group of banks in a few weeks that, or in April that says we can't pay down these loans without some serious liquidity problems. So we need some help from the Fed. Please bail us out again. And they'll call it something else, and they'll give it a new acronym, and everyone will be like, oh yeah, it's just the FTBX2Z version 5, whatever. But something's going to happen. We don't know exactly what it is, but there's a fault line somewhere, and we're getting close.
The only solution to this problem seems to be to expand the money supply again. That seems to be the Fed's way of solving problems, is just throw money at it, which will just devalue the dollar even more, right?
Yeah, well, there's two things they could do. They could inflate more, or they could just let everything collapse. It's a binary path. There's nothing else to do. And if they either way, and this is something that a lot of gold and silver stackers don't quite understand, and it's hard to really internalize it, because it's very scary, and you think that one path is failure and the other path is success, but they all lead to the same thing, and that is, well, if the Fed decides to inflate more, then a run on the central bank is the equivalent of New York Community Bank Court depositors taking dollars out of their bank, but a run on the Fed is taking our money out of dollars, right? That's a saying that it's hard to register, because dollars are money, but no, they're not. They're a derivative of money. So a run on the central bank would be people taking their gold out of dollars by getting rid of dollars and buying gold, right? At some place like Miles Franklin, as you know. And when everybody does that at the same time, nobody sells any. And then the merchants are stuck with it. So that's the end game. Well, not stuck with it, because we can trade it for other things, but yeah, so they can either print more and then people run after gold, or they can print nothing and then all the debt defaults. And then what happens then is that the money supply shrinks so drastically as the defaults go in a domino effect, chain by chain by chain, all the way back to 1971, when gold was $35 an ounce. We end up with gold at $35 an ounce, except its purchasing power in dollar terms goes through the roof in the same way. So either way, let's say in a hyperinflationary scenario, a house sells for 10 ounces, whatever, 5 ounces of gold, whatever the number is going to be. And then in a hyper-deflationary scenario, it's the same thing. A house sells for 10 ounces of gold for $350 instead of $3.5 million. It's just a question of how many zeros, but it's all the same thing.
No, we're recording this on Wednesday, and Powell has testified in front of Congress now, and the media and the markets are taking it as a bit dovish. And the market is expecting a few rate hikes this year. Powell has said that rates seem to have peaked, but there's no time frame on any sort of rate cuts. Do you see that impacting the markets and the economy this year, or do you think things will kind of spiral out of control before any sort of policy change by the Fed would really make much of a difference on rates?
Yeah, I think in the next few months, something is going to hit and something is going to start spiraling out of control. But I want to use that term carefully, like spiraling out of control. Because, like, what are they trying to control? They're trying to control an illusion of debt that can keep being paid, that keeps circling in on itself and can pay itself off, and then it's spinning faster and faster and faster. We see the eye of the hurricane in Treasury bills that are now $6 trillion of this stuff cycling in and out every month. I think the 2023, if I remember correctly, if I looked at the SIFMA report, which compiles all the Treasury data for every year and every month, I think the total amount of treasuries that circulated, Treasury bills, just like up to 1 year maturity, was like something like $19 trillion. So this is the stuff at the center of the storm, and all this stuff isn't real. Like, what's going to spiral out of control? The illusion is going to spiral out of control. It's going to spiral into nothingness because it doesn't really exist. Like that's what's really driving society crazy, right? That everyone's in debt and trying to pay off their debt and going into debt to buy a house, and then they need to raise in their salary to pay off their mortgage, and then the mortgage needs the money to pay off its mortgage, et cetera, et cetera, et cetera. So that's all of that's going to spiral away out of control. And as for Powell, what he said, Powell's just saying what he knows the market wants to hear. They want to hear something non-committal, not too frightening. It's like a lullaby, right? If your kid's crying at night, and so you sing him a lullaby, and then hopefully he goes to sleep. That's exactly what Powell's doing. But maybe sometime in April, May, June, something like that, something's going to happen. They're going to have to cut to zero, overnight, probably not even in a meeting. Like look at it. I don't want to compare the Fed to Egypt, but this just happened right next door to me, so it's in my head. But you wake up one day and you think you have a certain amount of dollars or a certain amount of purchasing power, and then bam, the central bank, allows your currency to float after trying to peg it for 10, 15, 20 years, whatever it was, and then all of a sudden you have nothing. That's what's going to happen to everybody, even the Fed. It's just another instance of it. It's going to happen everywhere. They're all the same. The Egyptian pound, the US dollar, who cares?
When it comes to the economy, it seems like we're seeing cracks already appearing in Europe. We're seeing a lot of countries in recession. And in the US, people have been expecting a recession. It hasn't hit as far as we know of yet. Your perspective on, are we going to see a recession in the next couple months, and what also we're seeing currently in Europe?
Like a Keynesian style recession where the GDP goes down. So, yeah, I mean, I try not to follow these numbers too closely because I know it's also an illusion. Like GDP is an illusion. It's just basically the money supply. Like it calculates how many dollars are circulating. So, I mean, I'm not saying it's completely meaningless. There is a meaning to it. It does correlate with something. But if the money supply is going down, there will be a recession because GDP is how much money is circulating. And if it goes down, it means people are poorer or feel poorer. So, I mean, what I'm thinking is that the last factor that is keeping the money supply steady to growing is, first of all, what I said before is the high interest rate debt and credit cards that Gen Zers are doom spending and just buying whatever they can because they've given up on saving and raising a family and living a normal human life. This is one of the stages of hyperinflation, right? You just get off the treadmill and you're like, forget it. I'm just going to buy whatever and get rid of my dollars, which is the same thing as stacking, really, except with lesser quality goods and services, right? If you're gonna buy buy a pack of gum versus a brick of gold. A brick of gold is or a coin of gold, sorry, is more liquid than a pack of gum, but they're still both a flight to real goods, right? It's the same thing conceptually. So are we going to have a Keynesian style recession if the money supply keeps shrinking? Yeah. If the reverse repos run out and we hit something, yeah. If there's a financial crisis and then debt starts to default, that all shrinks the money supply even faster. And then people are in recession. Just to go back to Egypt for a second, or the people that had pounds and now they have a lot less, are they in recession? Yeah. What about the people in Egypt that have gold? They have a lot more purchasing power now than they did yesterday. They're fine. So if you want to stay out of recession yourself, get some money. If you want to be part of the recession, be part of the fake money. Do what you want.
Now, as coming full circle here, as for investing in precious metals, obviously we are seeing quite a rise for those wanting to that haven't jumped in yet and gotten physical precious metals as protection. What do you say to them when prices seem a bit elevated right now?
What do I say to them? Don't, it's not about dollar profits, right? It's not about earning dollars with gold. It's about having gold, having money, having gold and silver. It doesn't have to be gold. It can be silver. It depends what you can afford. It depends what you want. But you need some money. And it's not a thing that you want to like take a position in and then try to sell it for a dollar profit and then calculate how much stuff you can get with with those dollars. It's it's about you get a paycheck, right? And you're paid in fake money. So take some of that paycheck and get some silver. Do it every month and stop. Don't even look at the price. It doesn't matter. And I will say this that I've noticed that I also wrote this on the Endgame Investor that the all-time highs in gold, they're not being reflected in the physical markets. I don't think from the premiums that I'm seeing, they're falling and they're not being reflected in the ETFs, meaning the retail investors are not really part of this. It seems because if they were buying GLD there would be inflows of gold into GLD, but they're still flowing out. So what this seems to me to be is a banker war between banks and maybe family offices. It's focusing on the futures market, and that's where the big money is. They don't mess with ETFs. They're not retail investors. Some big money does, but most of it is in the futures market because all the leverage is there. And we saw this leading up to March 2020 for about a year. Open interest was just heading higher and higher and higher and higher. We're coming off a low in open interest in gold. Open interest is the amount of contracts that are open. We got up something like 800,000 on the eve of the lockdowns. And open interest is up something like 60,000 contracts. I think it's like 15% of the total open interest from 3 days ago, over the last 3 days. So there's some kind of bank battle going on here, and the stackers are not really involved. They're on the periphery right now. When they get involved, price will go much higher. They're not involved right now, so I don't see this. I don't see this rally stalling anytime soon.
It is interesting because there's no, overhead resistance in gold, right? And we have had a few years of consolidation, so it's not like we've been running straight up or anything. So it does seem like there's a lot of room potentially for gold to rise from here.
Yeah, the people that I listen to, and I'm not a technical trader, so I listen to technical traders because that's not my talent. I want to know what they think, because that's how they see the market. So when I listen to them, they're like, they say, look, I'm a technical trader, but I understand fundamentals also, and I can't understand why gold isn't just heading straight up from here because the world is insane. And when the world is insane, people go to gold and silver because it's grounding, and they want to have something in their hands that they can feel and know that they can wake up tomorrow and it'll still be there. So they're kind of losing it, and they don't understand. And frankly, neither do I. But it's okay. I know everything's on a delay. I know what's going to happen later. So yeah, and on the one hand, I'm surprised. On the other hand, it's about time. And we're living in that dialectic until bam, something happens, and then you wake up the next morning and gold is like 10, 15, $20,000 an ounce, and your dollars can't buy anything. Could it be tomorrow? I don't think it's going to be tomorrow, but it's going to be one of those days.
Well, as always, it'll be very interesting to continue to track this with you, Rafi. If our viewers are interested in learning more, they can go to the Endgame Investor on Substack. Can you share with us a bit about that?
I write there 4 times a week. Sometimes I don't give any advice, but sometimes I do share what I'm doing in my portfolio on rare occasions. And I do put out, a more philosophical monetary article for free, about once a month. So there is some free content there. And you can also follow my YouTube channel. I give some interesting interviews. I take some interesting interviews, and I try to make it fun and put in a bunch of memes and movie references and whatever's going on in my head. Keeps me together. And you can also be my patron on Patreon, where I give a more religious angle on things that are going on now, especially in money. And the last thing I found was how God gave Moses a silver coin and said, "This is how big a shekel is." I found it. It's pretty cool.
Fantastic. Well, we really appreciate your time, Rafi. Any last thoughts before I let you go?
Well, if I don't see you next month because the dollar can't purchase any internet bandwidth, then we'll reconnect after the end game. But I think we'll last another month maybe.
Sounds good. See you then, Rafi.
You too.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for March 4th through March 11th, 2024 while supplies last. First, we feature backdated 1-ounce silver maples at $3.39 over spot. We also have circulated British gold Queen Elizabeth sovereigns at $26.99 over melt. And finally, we're offering our choice 1-ounce Palladium bars at just $119 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.